Hello, everyone, and welcome back to the Babalian Money Show. It's great to have you here. Today, we diving into the question that's on every crypto investor's mind. Is Bitcoin ready to make a new all-time high? The market has been an absolute roller coaster lately, and after a period of consolidation, the signals are getting very interesting. We've seen incredible resilience from Bitcoin, holding key support levels and showing signs of accumulation by major players. But is this the calm before the storm? Is this the moment we've all been waiting for, where we finally break past that previous peak and enter a new phase of price discovery? In this video, we're going to break it all down. We'll look at the key technical indicators, the macroeconomic factors at play, and the on-chain data that could give us a clue about what's coming next. We'll analyze everything from the recent ETF inflows to the upcoming halving's historical impact. So grab your coffee, get comfortable, and let's figure out if we should be getting ready for liftoff. First, let's set the stage with a quick disclaimer. I am not a financial advisor, and this video is for educational and informational purposes only. The cryptocurrency market is highly volatile, and you should always do your own research and consult with a professional before making any investment decisions. Never invest more than you are willing to lose. All right, with that out of the way, let's get into the charts. When we look at Bitcoin's price action on the weekly chart, a few patterns immediately stand out. We've been in this consolidation range for a while now, building a strong base of support. This is actually a very healthy sign. Parabolic moves that go straight up are often unsustainable and lead to sharp, painful corrections. What we're seeing now is a market that's taking a breath, shaking out the weak hands and allowing stronger conviction buyers to step in. This period of sideways movement is often what precedes a major breakout. Think of it like a coiled spring. The longer the consolidation, the more energy is built up, and potentially, the more explosive the subsequent move. We are currently testing the upper boundary of this range, and a decisive break and close above this level could be the signal we're looking for. This would invalidate the bearish scenarios for the short term and put a new all-time high squarely in our sights. Now, let's zoom in on some key indicators. The Relative Strength Index, or RSI, is a momentum oscillator that can help us identify overbought or oversold conditions. Currently, on the daily and weekly charts, the RSI is not in overbought territory. This suggests that Bitcoin has plenty of room to run to the upside before it becomes overheated. We're in a healthy, neutral zone, which is ideal for starting a new leg up. Another crucial indicator is the Moving Average Convergence Divergence, or MACD. We're seeing some potentially bullish signals here as well. A bullish crossover on the MACD, where the MACD line crosses above the signal line, often precedes upward price momentum. We're flirting with such a crossover right now, and if it confirms, it could add significant weight to the bullish thesis. These technicals aren't a crystal ball, of course, but when they align, they paint a compelling picture of market sentiment and potential direction. But technical analysis is only one piece of the puzzle. To get the full picture, we have to look at the on-chain data. What are the big players, the so-called whales, doing? On-chain analytics firms have been reporting a significant trend of accumulation. We're seeing large amounts of Bitcoin moving off of exchanges and into private wallets. This is a classic bullish signal. When coins leave exchanges, it means they are likely being moved into cold storage for long-term holding, reducing the available supply on the open market. Less supply, with constant or increasing demand, naturally puts upward pressure on the price. Furthermore, the number of addresses holding a significant amount of Bitcoin has been steadily increasing. This isn't just a few whales. It's a broader trend of accumulation across the board, which shows growing conviction in Bitcoin's future price potential. Let's also talk about the macro environment, because crypto doesn't exist in a vacuum. A few months ago, the narrative was dominated by high interest rates and a hawkish Federal Reserve, which is typically a headwind for risk assets like Bitcoin. However, the sentiment is starting to shift. Inflation is showing signs of cooling, and the market is now pricing in potential interest rate cuts later this year or early next year. A more accommodative monetary policy, or even the expectation of one, makes assets like Bitcoin more attractive compared to traditional savings or bonds. This risk-on sentiment can be a powerful catalyst for a new bull run. The global economic landscape is a complex beast, but the winds seem to be slowly but surely shifting in a direction that is favorable for Bitcoin. And we cannot have this conversation without talking about the massive success of the spot Bitcoin ETFs in the United States. This has been an absolute game changer. These ETFs have unlocked a torrent of institutional and retail capital that previously had no easy, regulated way to get exposure to Bitcoin. The daily inflow numbers have been staggering. We're talking about billions of dollars pouring into these products, creating a constant, programmatic source of buying pressure. Every single trading day, these ETF providers have to go out into the market and buy actual Bitcoin to back the shares they issue. This has fundamentally altered the supply and demand dynamics. The demand from ETFs is, on many days, far outstripping the new supply of Bitcoin being mined. This structural demand is a powerful, long-term tailwind that simply didn't exist in previous cycles. It provides a solid floor for the price and is a key reason why many analysts are so bullish on Bitcoin's long-term trajectory. Another fundamental factor to consider is the Bitcoin halving. For those who are new, the halving is a pre-programmed event that happens approximately every 4 years, where the reward for mining new blocks is cut in half. This most recent halving has reduced the new supply of Bitcoin coming into circulation each day. Historically, the periods following a halving have been incredibly bullish for Bitcoin's price. While past performance is not indicative of future results, it's a pattern that's hard to ignore. The supply shock from the halving, combined with the demand shock from the ETFs, creates a potent cocktail for a potential price explosion. We are now in that post-halving window where, in previous cycles, the price began to accelerate significantly. The full effects aren't immediate, but they build over time as the reduced supply really starts to be felt in the market. So let's put it all together. From a technical standpoint, we have a healthy consolidation pattern with bullish potential on key indicators like the RSI and MACD. From an on-chain perspective, we see strong accumulation from long-term holders and a decrease in exchange supply. From a macroeconomic view, the potential for future rate cuts is creating a favorable environment for risk assets. And finally, from a fundamental and structural perspective, we have the unprecedented demand from spot ETFs, coupled with the programmed supply shock of the halving. When you line up all these factors, the case for Bitcoin being ready to make a new all-time high becomes very, very compelling. It feels like the market is coiling up, absorbing all the selling pressure, and preparing for its next major move. The question seems to be less if and more when. A breakout above the previous high could trigger a wave of FOMO, fear of missing out, from those who have been sitting on the sidelines, potentially propelling the price into a new discovery phase where the sky is the limit. Of course, we must also consider the risks. A sudden negative geopolitical event, a regulatory crackdown in a major country, or a shift back to a hawkish stance by central banks could all throw a wrench in the works. The crypto market is known for its volatility, and sharp corrections can and do happen. That's why risk management is so important. But based on the data we have right now, the bullish signals are flashing brightly. The confluence of positive factors is something we haven't seen in previous cycles, making this a unique and exciting time for Bitcoin. So, is Bitcoin ready to make a new high? In my opinion, all the ingredients are there. The stage is set for a significant upward move. It's been an incredible journey to watch, and the next few weeks and months are going to be absolutely critical. Thank you so much for joining me today on the Babalian Money Show. I hope this analysis was helpful and gave you some valuable perspective. If you enjoyed this video and want to stay updated on all things crypto and finance, please do me a huge favor and hit that subscribe button and turn on notifications so you don't miss our next video. It really helps the channel grow. Thanks again for watching, and I'll see you in the next one.